We're going to work on some of the homework problems from chapter 2, and I would suggest the following approach. Know which problems we're doing. I'll read the problem, then why don't you pause the video, work on the problem, and then come back and see how you did. So here are the problems that we're going to be doing in class from chapter 2, exercises 1, 4, 7, 12, 13, and 14, and problem number 3. So let's first look at the first exercise there. And this is going to be exercise 1. The following are the major balance sheet classifications: current assets, long-term investments, property, plant, and equipment, intangible assets, current liabilities, long-term liabilities, stockholders' equity. And then as you can see from the problem, what it does is lists out a bunch of accounts, and then we're asking you to classify them according to those categories. So why don't you take a pause, fill out the solution, and then come back. As we look at the problem, accounts payable is a current liability. Accounts receivable is a current asset. Accumulated depreciation, property, plant, and equipment. Buildings, property, plant, and equipment. Cash, current asset. Interest payable, current liability. Goodwill, intangible asset. Income tax payable, a current liability. Inventory, current asset. Stock investments to be sold in 7 months, current asset. Land in use, that means it's used as a productive asset to generate revenue. It is property, plant, and equipment. If it was land held for investment, it'd be long-term investment. Mortgage payable, long-term liability. Supplies, current asset. Equipment, property, plant, and equipment. Prepaid rent, current asset. Let's take a look at exercise number 4. Exercise number 4 says, suppose the following information is available for H.J. Heinz Company, famous for ketchup and other fine foods, at April 30th, 2022, and they give you a list of accounts. The instructions say, prepare the asset section of a classified balance sheet, listing the items in proper sequence and including the current heading. Why don't you give it a shot, and then we'll come back. Let's take a look at the solution. Again, they've given you a bunch of accounts, and remember, this is for the asset section of the balance sheet, and assets are listed in the order of liquidity. Let's take a look at it. And they ask you to put a heading on there, so H.J. Heinz Company, the name of the company. This is a balance sheet. So you name the financial statement we're looking at, balance sheet. And then when, as of, at what point in time? April 30th, 2022. That's the title, that's the heading. Very important. It informs the reader of company, financial statement, time period. And we want to start with our current assets. Remember, in the order of liquidity, we have cash, the most liquid, $373,145. Accounts receivable, I'm going to abbreviate AR, 1171797. Inventory, 1,237,613. And prepaid PPD insurance, again abbreviating, 125,765. Total current assets, CA current assets, 2,908,320. Then we have our non-current assets. We talking about long-term items. We're looking at PP&E, property, plant, and equipment. We have land at 76,193. We have building at 4,033,5 369. We have accumulated depreciation, A/D, and we're going to learn later on that accumulated depreciation is a contra asset. It is a negative asset, if you will. It has a normal credit balance. So we're going to put this number in brackets, 2131,260. We have property, plant, and equipment at 1,978,302. And then we have our intangible assets, I/A, intangible assets. We have goodwill, GW, goodwill, at 3,982,954. And we have trademarks, TM trademarks, 757,907. And that's going to total 4,740,861. Total assets 9,627,483. Sorry about that, I got a little jammed up, but you can essentially see what's happening there. Total assets 9,627,483. The key is the breakdown, right? Between current and long term. That is the key. It's exercise 2-4. Let's take a look at exercise 7. And this is a fairly long exercise, but we do want to cover it. Again, exercise 7, suppose the following items are taken from the 2022 financial statements of Texas Instruments. Again, a lot of accounts. Prepare a classified balance sheet in good form as of 12/31/22. Got a bunch of accounts. Again, classified balance sheet. Going to do the assets section, current assets, and then the long-term items, coming up with total assets. And then you're going to do the liabilities, breaking out between current and long-term, as well as the stockholders' equity section. So why don't you pause the video, take a moment to solve the problem, and then come back. So let's take a look at the solution here. And again, you want to make sure you put a title on there. I'm not going to put it up because it takes up too much space, but you want to deal with the title, Texas Instruments Incorporated, the balance sheet, December 31st, 2022. And you want to look with the current assets. Remember the order of liquidity. You've got cash, 1182. Debt, investments. It does specifically say in the problem that those are short term, which makes them current. It's 1743. Accounts receivable, 1823. Inventory, 1202. And prepaid rent, 164. Total current assets, total CA, 6114. So that is the current section. You would then move on to the rest of the balance sheet, and you would have long-term investments, which are 637. And then you're going to have property, plant, and equipment. You're going to have the equipment at 6705. And you're going to have the accumulated depreciation, which is a contra asset. I suggest putting it in brackets, 3547. And then you have your intangible assets, which are patents, at 2210. And you have, put the total current assets up here, which were 6,114. Your total assets 12,119. 12,119 total assets. Now the goal is that when you get to the liabilities and equities, that it balances to this number here, right? Assets equal liabilities plus owner's equity. Let's take a look at the current liabilities. And you're going to have accounts payable, A/P, accounts payable, 1459. You have income tax payable, of 128. Current liabilities of 1587. We have notes payable, which is our long-term liability, at 810, which gives us total liabilities of 2397. We then have our stockholders' equity, SHE, stockholders' equity, and we have common stock, C/H, of 2826. We have retained earnings, R/E, retained earnings, at 6896. Total stockholders' equity is 9722. And we have total liabilities and stockholders' equity at 12,119, which is what? The total assets that you had. So your total assets equal liabilities plus stockholders' equity. That's 2-7. Let's move along to number 12. In number 12, we are looking, so this is exercise 212, exercise chapter 2, exercise number 12. And here they're giving you some comparative numbers, not comparative balance sheets, not comparative income statements, but a bunch of comparative numbers, 2021 versus 2022. Suppose the following data were taken from the 2022 and 2021 financial statements for American Eagle Outfitters. And they're asking you a bunch of things here. So this is where we're going to be doing some ratios that we talked about. It says, A, calculate the current ratio for each year. So A is current ratio. And you remember what the current ratio is. That is current assets divided by current liabilities. So we have 2022, 2021. And for 2022, it's 925,359, which are my current assets, divided by current liabilities, 401,763 equals 2.3 to 1. And for 2021, we've got 1,020,834 divided by 376,178. This is 2.71. So the current ratio went down. They were at 2.7, they dropped to 2.3. Not necessarily good. Item B, earnings per share. And you remember the formula for earnings per share, net income minus preferred stock dividends divided by weighted average common stock. So we look at the list here, there is no preferred dividends paid, no preferred dividends paid. So it's simply going to be, in this case, net income divided by weighted average common stock. For 2022, we're looking at 179,061 divided by 205,169, which equals 87 cents per share. We look at 2021, we're looking at net income of 400,019 divided by 216,119 equals $1.85 per share. So in 2021, they were at $1.85